a part-time job in the World Options Trading Program. And what we're going to talk about is a current situation going on in the market today. And what I'm labeling that is probably going to be one of the biggest pump and dump schemes in the history of the stock market. Now, it's probably not going to be the biggest pump and dump scheme, but it's going to probably go down as one of the biggest pump and dump schemes when all of this thing is over, based on the size of it and how long it's going on. And I essentially see these two scenarios as like a combined scenario, right? And today, as we saw AMC stock and we saw GMC stock was going on Felder, we saw go up to a very, very high price point. And one of the issues is that, in my opinion, this is a pump and dump scheme. And I'm going to kind of explain to you why I think it is and kind of give you some of my reasons. And you don't have to agree with it, but I'll kind of lay my case out. And then what we can do is continue to observe where this thing goes into the future. So what we're seeing with this AMC play and with this GME play is that there's a lot of market commotion, a lot of market noise around that there's going to be a short squeeze on this particular company, and that's going to really shoot the share price up really, really high. Now, high is relative, right? Because AMC is trading under $30. GME is trading under $300, around a 255, 260 price point. However, a lot of people believe, and we talked about this in earlier videos, is that there's going to be an increase in the price point. And for some reason, they believe that these particular hedge funds are going to get margin called and have to cover their short position by buying up that stock at a high price. And then as a result, that's going to put a lot of fuel underneath that particular stock, and then that's going to run the price up. So you got people thinking that AMC can go to $100. Some people think that it can go to $1,000. Some people think GME can go to $1,000. This is my questions about this particular play, because based on the kind of the way the market works and the fundamentals of the market and kind of the specifics of that particular company, I don't understand how that's going to play out. I'm not saying it can't happen. Anything can happen, right? What I'm saying is I don't really understand. I don't think that has a high probability, but it could happen. The first question is that, do people really understand how the market actually works? So from the standpoint of that, in a market where we're transacting something, whether it's going to be a service but normally what we're transacting is an actual item or a product, right? So we call that a share of stock. For a transaction to take place, there got to be a buyer and a seller, right? Now, I know we got a lot of electronics where we sometimes have algorithmic computers selling shares to another algorithmic computer. That does happen. In fact, it's the majority of trading, but there's human beings behind that. But in the market, somebody has to buy, somebody has to sell to actually complete a transaction, right? So what I'm confused about is that, let's look at the AMC scenario. AMC has a float of around half a billion shares, around 455 million shares, right? Don't understand, necessarily know the institutional buy-in. But if the concept is that we're going to buy, let's say we're the group that thinks that we're going to short squeeze AMC. If we're going to buy AMC shares and we're not going to sell, the question is, if I bought them from somewhere, somebody had to sell it to me. So if the concept is buy AMC shares but don't sell it, well, somebody sold it to you because that's how you bought the shares. So that's the first thing. So if the concept is buy AMC shares but don't sell it, well, somebody had to sell the shares to you for you to buy them and hold them. Then the question is, if nobody sells, but we just sit on our shares, what is the demand for the actual stock? Because it means there's no transactions taking place. So let me give an example. If I buy something, it's because somebody was willing to sell it to me. If I want to buy something, but nobody's willing to sell it to me, well, then we don't have a market because there's no transactions taking place. So I'm confused as to how AMC short squeezes, because if nobody's willing to sell and everybody just holds their shares, then how do you create a demand on the actual stock that makes it go up to where the hedge funds get short squeezed? So somebody has to be selling somewhere. And so that's what's confusing. Now, I think AMC is going to have legs a little bit longer than GME because at the price point that it's at, it can attract a lot more people. A lot of people can wrap their head around buying a share for $30 as opposed to buying something for $250, $260. But what I'm seeing with AMC is that let's create this movement in which we're creating this narrative that we're going to punish the hedge funds and get people to believe that you can punish the hedge funds by buying shares of AMC and not selling. But again, if you bought it, somebody had to be willing to sell it. So somebody sold you shares because you now own shares. You understand what I'm trying to tell you? So then the question is, if nobody sells, then we got to find new buyers to move the price up. So then who are going to be the new buyers? Because what we're telling people is, dudes, they're saying buy and hold, buy and hold, buy and hold. Well, somebody's buying. So if somebody's buying, then somebody's selling. You understand me? So then the question I want to ask you is that, who are the people that are selling you the shares? Right? Now we look at GME. GME has a much smaller float. It's around 45, 50 million shares. They got a really, really small float. It's relative. However, GME's institutional buy-in is around 80 something, maybe 90 something %, right? So what it means is that large institutions own this particular ticker. But they're running the same narrative, buy and hold. So if you're buying GME shares, somebody's selling it to you. Well, we know we got institutional buy-in around 80 something %. So who do you think you're buying it from? So do you understand what's going on? The large institutions are selling this stuff to retail, right? If I bought GME as a large institution, if I bought AMC as a large institution at $5, I'm very pleased to sell it at 30. It's a great deal for me. And what I can do is continue to sell it to them as long as they continue to buy it. Because let me explain something to you about a market. If I go to you and I say, hey, I want to buy this house from you, and I believe the house is valued at, let's say, $225, and I offer you $225 and you say no. I say, okay, cool. Let me offer you $250. You say no. I say, okay, cool. Let me offer you $275. You say no. I say, okay, cool. Do you know what I'm gonna do? I'm gonna just go find me another house to buy. So if there is a demand on shares for AMC or GME and nobody is available to sell it to them, you know what happens? The market just goes somewhere else because there's a demand to buy this. Nobody's buying GME or AMC because they believe it's a hell of a business. You understand me? So the retailer's being told, buy this because we're going to short squeeze it. The question is, again, who are you buying it from? We know GME has around 80 something % institutional ownership. I forgot about AMC. I probably should have looked it up before I got on the video. So the question is, first, who are you buying it from? Then the next thing is that for it to go up, right, you need so much demand on the actual shares. So you got to always be bringing more people in to buy. And what you really need is for the actual market makers and the large institutions to not sell you any shares. But why would they do that if that's going to destroy their fund or their firm? So what we're seeing is a classic pump and dump scheme. You see a lot of this in crypto, and they're just running this. We've seen a lot of the crypto pump and dump schemes now get brought. A lot of the penny stock pump and dump schemes get brought to a lot of what I call the small cap tickers, where what we do on these message boards inside these little online communities, we have certain confederates, and what they do is they hype up tickers. And they get everybody on board with hyping up the ticker. Now, a lot of these guys got in at very, very low price points. And then they get people to hype up the ticker, and people start to feel like, okay, we got this movement going on. I got this thing that I'm part of that's bigger than me. I have this way in which I believe I'm going to become wealthy or rich. And then I get involved in it, right? And then what I'm going to do is I'm going to, kind of participate in this particular movement. And we've seen a lot of this in crypto around 2017 to 2019 with a lot of the crypto pump and dump schemes. The problem is, like I said before, it's based on how the market works. What you're going to see, in my opinion, is that these particular shares are going to hit a tipping point. When people feel like I've gotten more money than I've ever had before in my life, and it's time for me to sell, that's going to start a catalyst to selling. So when you're looking at AMC, what price point do we need to get to before people start to sell? Right? Because then once we start selling and we lose the momentum of the movement, then everybody's going to follow. Same thing with GME. What price point do we need to get to before people start to sell? So let's say I bought GME at $150 and now it's $500. Do I hold it or do I sell it? Because like I said before, we're not in GME because we think it's a hell of a business. We're in it because we're trying to utilize this short squeeze. Well, the longer it takes for the short squeeze to take place, the more people are going to start to lose their resolve. They're going to start to lose their morale, and they're also going to start to get distracted with the next hot thing, right? So really, I want you to understand that this to me is a classic pump and dump scheme. We got to see how it plays out. But what we're seeing is that the narrative is that not that we're buying these companies because we believe in the long-term future of the business. We're just trying to execute this pump and dump scheme against the hedge funds. The challenge is that the same funds that you're trying to punish, they own the actual shares that they're selling. They're selling the shares to you for you to buy, for you to execute the pump and dump scheme. You're not buying it from this pool that's in an escrow somewhere that allows you to buy shares whenever you want to. You're actually buying it from another group of people. So you got to ask yourself, is that if selling those shares was going to destroy them, why would they sell them to you? So what they're going to do is they're going to spoon feed you enough shares so they can liquidate some of their position at a higher price than which they bought it for, because we all know that GME's prospects to continue to be successful 5 years from now is really not that high. The same thing with AMC. So nobody's really tripping on selling shares of AMC at $35 and $40 when we bought it at $5 a year ago. And we saw last week or the week before a major fund exited out of their total AMC position. So they got out of the deal. The question is, what did they buy in at? So AMC at that time probably was maybe $15, $20. They exited their whole position out of AMC. What did they buy in at? If they bought in at $5, that was a great return on their particular investment. So what we're going to do is continue to observe this. But what we're seeing to me is classic pump and dump schemes where we bring a lot of people in. We've already got into the deal. We bring a lot of people in behind us. We exit at the top. We don't tell them when we exit. We keep it going because this ain't the last pump and dump scheme that we're going to run. So we keep it going like we're still in the deal. And then once people sell, you're going to get a massive run of selling. And so we want to continue to observe that. Because if I bought in at AMC at $10, I'd be out right now. Because I don't know where else you think it's going to go, right? Unless you're going to hold this long term for 5 years or greater. If I bought in at $10, I'm gone. If I bought in at 15, if this gets close to 30, I'm gone. Because I've essentially doubled my money. So you really got to ask yourself, where do you think this is going? So let's continue to observe this. This is just my observation. It don't mean that I'm right. But what I'm seeing a lot is classic pump and dump schemes. Also, by looking at the options chain I talked about on the earlier video, when I look at AMC's put options, their volatility is extremely high. Why? Because the market makers know that this thing's probably going to go down just as fast as it went up, right? Gamestop's put options are not as, the volatility is not as spiked. AMC's volatility is in the 300-400% because the market makers have already forecasted that this thing's going to fall extremely fast once it starts falling. So they already priced those into the put options. So they're not paying out a lot from premium because you're paying a lot of premium just to get the option on the face value. So that's one of the keys in which I believe that this thing is getting ready to tip over. And it may take another month because for AMC, they have this date of June 2nd. That's supposed to be this catalyst. The question is that if the catalyst takes place and people don't get what they want, do they stay in the deal? Right? Or do they try to move the catalyst down the road? And a lot of times with a lot of these pump and dump schemes, they create this date that's going to be a catalyst that's supposed to raise the price up. Then when that doesn't happen, they create a new catalyst. And the goal is to keep pushing the gold down farther and farther to keep people in the deal, right? You saw this with the Tulsa fund. Every time that a date came up and they couldn't meet the date, they created a new date to push it a little bit farther. Why? Because we got to keep people in this deal, right? So this is nothing new. This is classic pump and dump scheme type techniques and type strategies. So if you got any questions about that, reach out to me. This is David W. Williams, also known as Diamond Dave, and I'll talk to you later.